G'day there. Welcome to the closing bell. I'm recording this on the 11th of October on the Friday afternoon. Sorry I wasn't around last week. I took a bit of time off. It was school holidays. Had a bit of a staycation in Melbourne. Went to Crown Towers and had some adventures with my son, Daniel, which was great fun. So back on deck and raring to go. And look, there's a lot going on at the moment. It really is a bit of a quandary, isn't it? We've got wars, oil prices flying higher. What's going to happen if Israel reacts in a big way? Does oil shoot to $100, or does everything settle down and oil collapses again because it was already sort of on its knees recently? So I think we've got a situation where things can be quite explosive either way, and I don't think it makes sense to be sticking your neck out too far right at this point. But we do have things on the horizon like the Chinese stimulus. What's going to happen there? Also, the US growth picking back up. There's a lot of changes going on, but there are markets moving around. There's a bit of volatility. I'm actually doing quite a bit of trading in my services with interest rates, on the cusp of falling. Also, with this China stimulus, could that really get things going, get copper going again? I'm looking at lithium and rare earths. They're right on the floor, but they're showing some signs of life. Linus looking pretty good. And I'll actually finish up today showing you a pretty conservative stock that I think sort of fits the bill of, a large company, a good moat. A good competitive advantage, great stable earnings, pretty good yield, and sending a sort of a buy signal. So I thought that might be of interest to you. So keep watching if you want to find out about that. So I'm going to kick off with the Hang Seng, just as a proxy of the Chinese market and what's been going on there after the stimulus announcement. There was 11% swing on one day during the week in the Hang Seng, which I think shows you the volatility is sort of at that point of whether this stimulus is just a short-term fix on a bigger problem that's going to return in the Chinese property market, or whether this is a bit of a changing of the guard and things are going to turn back up again, which is a possibility, which would be obviously good for commodities and that sort of thing going forward. Some pretty big things going on. I'm not going to make big statements. I'm just going to give you levels to watch going forward to get a sense of what may be coming next. So let's jump to the Hang Seng. So before I get going, if as I go through these things, you find it a bit confusing, a bit new to looking at these charts and especially the way that I go about things, looking for opportunities and seeing how markets behave, looking at these points of control, looking at the false breaks and that sort of thing. If that makes you scratch your head, please go and read a quick document I've written for you called The Six Lessons. It really goes through my career trading from the futures floor in Sydney and explains where I got a lot of my philosophy from about how prices move and how traders get sucked out of positions over and over and how you can take advantage of that. So if you wanted to learn a bit more deeply about what I talk about, please go and read those lessons and you'll be able to watch these presentations and have a much better understanding of what's going on. So just click in the top right corner of your screen there, click on the little eye and have a read. I think you'd find it pretty interesting if you're interested in markets especially and trading markets professionally, looking to manage your risk really effectively. Just moving on now to this Hang Seng. And we saw a really wild swing in the Hang Seng just during this week. That's about more than 10% move. This is a monthly chart we're looking at here. And I just wanted to show you the long-term chart to give you a sense of the move we've seen since the bailout, no, not a bailout, I guess, the stimulus was announced. That Hang Seng went from 16,000 to above 23,000. So that's a huge move in a short space of time over this last month and a bit, and it's gotten a bit overstretched, and the selling has come back in. So we're sort of at a point of, decision now after we've had the initial buying spurt on the excitement of this stimulus. Is it going to carry through? Are we going to see a continuation? And how is that going to look? So is it going to start, trending higher into a new wave, like all these waves we've seen here to the upside? Are we on the cusp of that, which is going to be big news for us and how to position your portfolios going forward? Or have we seen a short squeeze and the stimulus isn't going to fix things, and the Hang Seng and Chinese stocks are going to tip over again? So obviously very important to understand which one it will be. So I just wanted to set out how the Hang Seng's moved and where the key points are, just for you to keep an eye on. So that's why I've got all of this structure here. I showed it to you last time. Once you start to learn how these things move, I'm looking at these key waves to the upside, and then I looked for that buy zone, the 75 to 87% retracement, and it's just saying that this sort of thing happens over and over again, where you have the initial wave, the correction into that buy zone area, massive shakeout of positions, and then it's ready for the next wave, the next bull market. Next wave higher, then the correction. Where does it go back to? Back into that buy zone area. And you can see it stuffs around there for a while, but still that was good buying down there. Got the next bull market, next wave higher. And then the next correction. Where does that go to? Down to the buy zone. And off it goes to the upside again for the next move higher. So from that point of view, it went and created a new high in the move back into 2017, 18, whatever that high point was. And then we've had, really serious correction. This is where the property market topped out, everything's selling off. And this is what I was saying last time, was that, well, it is right down in that buy zone area again. So if we're looking at the past few decades, this is not a bad spot to say, well, it may very well be the beginning of the next leg up. It pretty much was every single time in this rally all the way back to 1990. So from that point of view, I'd be leaning towards saying this could actually be the beginning of a recovery, even though it may not be straight away. And the way I'd want to look at it in the short term, and the way prices move, remember things move in a series of the initial move and then the shakeout. So if we are seeing the beginning of an upside move, you can see that initial wave there, and hopefully you can see that pulled back into the buy zone of that wave, and then had the next wave higher, which has created a new high. So this is potentially the beginning of an uptrend. So that means you could see a large correction from there, but still be trending up. So my point on this is really from here, if it goes back below the low of that whole structure, all bets are off, looks terrible. I think we can say safely that the stimulus hasn't really worked, and things could be getting pretty hairy. So looking at this going forward and having that sort of line in the sand, below 15,000, as long as it holds above 15,000, I'm going to go on to a sort of a more bullish posture on this, thinking that it could actually turn up. And I'd be still, though, saying that it's a bit overstretched in the short term. And based on, just looking at this structure again, you're looking at that structure and you're saying, well, there's the point of control of that, the midpoint, which is very important. Prices oscillate around that point, either find support or resistance there often, you can see there. And, then the buy and sell zones come into play as being resistance and support. So you can see prices have just nudged against that point of control there just recently on the Hang Seng. So it's an important point, right? So above there, breaking out above there is saying that it could really fly higher, up at least into that sell zone area again. So that'll be up to 30,000 or so. So that's one thing to note, is for a continuation, it can really blast off. And the long-term trend has actually turned up. So the way I'd look at this is I'd expect a correction, wouldn't be surprised by it at all, but I'd want to see some support coming in, around, let's give it a lot of room to move. Let's say 16,000 to 18,000. If we saw a correction there and then got a buy signal again, it may very well be the start of this big move to the upside. And as long as it holds above 15,000, I will sort of have that view, I guess, that this is how things could play out. So that, I know a bit much detail on the Hang Seng for you, but this is sort of where we're at. It's a very important point now, whether this stimulus can really turn things around. I am, partially thinking it may not, because they pumped their property market for so long, and it really is having trouble. And I have heard that, there could be some banks in a bit of trouble. They may be adding liquidity to their banks, which is, is a hint that there is trouble there. So we may still see more volatility ahead on that front. And, I'm very aware of that. And that's why I'm saying, if this thing really tips over from here and turns back down below 15,000, all bets are off, run away. But let's, be optimistic about this and say that there is signs here that this could be an inflection point for China. And therefore that would lead into things like copper. So we know that copper, big picture is actually looking pretty strong, isn't it? Long term, this is going back to 1999, and we know of this sort of, $4 to $5 area has been massive resistance for a couple of decades. So the question is it ready to bust out above that? And, when will that bust out happen? And how high will copper go? So we've already seen on the short term, I've been sort of showing you with copper that the long-term trend is actually up. We're just looking at the moving averages, 10-month exponential versus 20-month simple for me. And it's been pretty good, hasn't it, for a long time, giving you the sense of those big picture moves. So we're tentatively, bullish, saying that this is in monthly uptrend, just retested that all-time high and had a sniff at it. It had a correction, but that correction playing out sort of as expected. You got a wave correction to the buy zone, wave correction to the buy zone, exactly. So from that point of view, it is trending up over the last few years. And last month, we actually got a monthly buy pivot. So there's your high, there's the low of the move on the monthly basis, and we need a monthly close above the high of that candle, the lowest price candle in the move. And we saw that last month. So there is a monthly buy pivot there. So I'd expect any weakness actually to find buying support. And, the next target above here is to retest that all-time high. So is that a story for next year? Copper blasting off above that all-time high. So positioning for that and, willing to back that idea because of this long-term bullish picture. And, is that China story going to help things along as well, and interest rates coming off the boil? So for the moment, that is the setup. And, turning back down, monthly close below $4 in copper. For sure, I'll have to eat my words probably. But until then, happy to sort of be on a bit more of a positive footing on copper. And obviously lithium and rare earths is always on people's lips, but it's been a pretty terrible ride for a while. A lot of people have lost a lot of money in the last few years. It's what happens when things get hyped up. It's over and over. You see this happen. Everyone is on the same side of the boat, and then the music stops, and many people are left in terrible positions, and it really does hurt. Um, but when is this cycle over to the downside? Are we getting close? So I've been keeping an eye on it. Here's the sort of global lithium battery tech ETF. Just been keeping an eye on that. And we know, these waves back into the buy zone. So it's actually an uptrend that started there since 2015. We've had the next wave higher, that breakout wave to the upside, and it held above the midpoint there for a while. Long-term downtrend, failed, and then you had the clear out, the panic, and here it is down sort of in that buy zone area. And this is why it's sort of interesting, the bounce we've seen just in the last little period. But it is an oversupplied market for the next few years. This is that Rio takeover of Arcadium, has seen that initial excitement, but does that get snuffed out? This is why I need to wait for the end of the month. Do we get a monthly buy pivot in this? But also, even if we get that, doesn't mean it's not going to just do a bit of work before finally heading higher again. You can see it's not in monthly uptrend by any stretch, and that can take time. So you could see here back in 2019, it was getting close, looking pretty good, even rallied for a few months, but it remained in downtrend, and we saw another massive wave down before things were ready to turn up. Trend turned and then headed higher. So it may still be a bit early, I think, but we may be near the lows. I guess that's the point. It may take time to turn around. I think it'll end up creating a low down here somewhere. So it's one to keep an eye on. Also, rare earths, though, similar situation. You can see here with the rare earth and strategic metals ETF. I would say this is a pretty exciting area for it. Very strategic metal. We know it's in defense. It's so important. They're trying to pull away from China's dominance, etc., etc. But we've had, this massive initial wave higher, looking like a change of trend, which is like the hint to me. But then we've had a clear out. And so here we are down in that area. There's your buy zone area, got right down to the bottom of that. And then we've seen some buying pressure coming in. So there is signs of life. But again, it's early days. And, how long does it take till you get that final? We may be near the low, but there may be a bit of stuffing around before it really turns up. I think Linus are looking pretty good, though. They're trading higher, and I'm sort of interested in them. So yeah, I think we're down in an area where I'm getting interested, but just not quite ready yet. And do you wait until that long-term trend finally turns up before getting involved? So a bit of time up our sleeve, but certainly on the radar. I thought I'd just finish up today with a bit of a conservative play, I guess. Just to show you sort of what's out there as things are recovering as far as interest rates coming off the boil. Stock market's looking pretty good. Is ASX, the Australian Stock Exchange, been a bit of a monopoly. You can see over the years, it's been a great performer, going from, what, $10 up to 65. But the last few years hasn't been great for it. They've had that big technology snafu trying to use the technology behind Bitcoin to help their clearing. It all fell through, cost them heaps of money, lost reputation, and markets were going sideways for years. So they've came off the boil, $95 down to a low of $55 last year. And this is actually a semi-annual chart I'm showing you here. So every bar that you see is showing you the range over 6 months. So this chart's actually going all the way back to 1999. This is to get rid of all the noise and get a sense of big picture what's going on. So you can see long term, it's been a pretty good value creator, but it has been volatile, hasn't it? When you've got the crash, it can be quite connected, of course, to the markets. When the markets are going well, lots of people are trading. You've got a lot more revenue coming in, a lot more people listing, fees from that, etc., etc. And when the markets are tough, it can struggle a bit. But remember, it's a monopoly and its margins, net margins around 45%. So about 45% of the money they got coming in is profit. But revenues aren't necessarily growing at a huge clip. So it's a difficult one to value, but very steady income stream. It's not really feeling it's at risk right now. There's a few people nipping at their heels, but not really. Fairly good yield, about 3.5%. If yields keep dropping, you'd expect that to be pretty good. And, if markets really do take off, you could expect them to recover. And just from a technical point of view, really the end of this year, you're looking at the potential for a semi-annual buy pivot, which is about the most important one of the lot. You can see here there was a semi-annual buy pivot in 2012. Wouldn't have been bad getting on before that one. And also just looking at the corrections that occur. So you've got these waves to the upside. Then you get the correction, which sets up a period of oscillation around a mean. And you're looking for those false breaks of either edge of the range. So looking at that from the point of view of what I look at to show you those ranges, so it all makes sense, is looking at this correction. You can see here, and I'm looking at that wave and saying, right, well, there's areas outside the range. If I'm looking at that range, there's areas outside where I expect there to be resistance, where you could possibly see a reversal, so a false break and a reversal back to the midpoint, the point of control, and on the bottom side as well. This is where a lot of stop losses are below the low of the range for people who have been buying in here. And if you want to understand this more, please go and read the 6 lessons. Click on the top right corner, the little I, and you'll get a big document outlining everything to explain it for you very clearly. And when you've got those stop losses go off, big clear out of positions, and if prices turn up and then re-enter the range, you can, and with the buy pivot confirmed, you can expect fairly good odds of a move back to that point of control. So that would be your initial target, up around 75, a bit above $75. So the way I use that is getting on that, capture that move, sell a third of the position, create a break-even stop loss, create a free call option, and then run the position without any risk to your initial capital. Now, if that made your head spin, again, read the 6 lessons. So that's my little hint for you today. I think that's probably the path of things for ASX. If markets pick up, rates drop, and we're getting a bit go on a bit of a nice bull run, especially if commodities do take off, China takes off, etc., etc. So that may be a conservative one to add to the portfolio. So I think that's enough. I've crapped on for a while. I'll come back with more next week. Cheers.